Ladies and gentlemen, as we start off with the opening remarks, we are very pleased to have with us a gentleman of immense stature. As he steps up on stage, I'd also like to thank the organizations that have made this summit possible. Most importantly, of course, our silver partner, the MMR Group, our associate partners, who include Arihant Superstructures and HDFC Realty, our knowledge partner, Jones Lang LaSalle, our supporting partners, FIFA, that is the Federation of Independent Financial Advisors, and AIBI, which is the Association of Investment Bankers of India. Ladies and gentlemen, at this India Retail Investment Summit, Real Estate Investment Summit 2014, it's a pleasure to have the opening remarks by a gentleman with a wealth of experience. He is the board member, Asia Pacific Real Estate Association, Vice Chairman of the British Chamber of Commerce, Hong Kong. He brings to this days an experience of over 2 decades in real estate, construction, hotel, and investment fund clients, covering everything from IPOs to due diligence to mergers and acquisitions to significant projects, ad hoc projects, you name it, he's had experience in it. He is the China Board and Executive Committee member for KPMG. Ladies and gentlemen, please welcome Regional Senior Partner KPMG Hong Kong and the Global Chair Real Estate and Construction KPMG. Ladies and gentlemen, Andrew Weir.
Sorry, do you mind?
Some issue about the viewer. Clicker, left, right. You can point the clicker.
Yeah. Okay. Good morning, ladies and gentlemen. Excuse me for a bit of a technical hitch there. Can I just check the slides can actually be seen? Can it be seen? Yeah, okay, thank you. It is a great pleasure to be here, and thank you very much for the kind invitation. My role in life is the global chairman of a real estate practice at KPMG. I've been involved in the real estate sector, particularly in Asia, for the last 20 years. And it gives me great pleasure to be in India, to be at this conference and to see so many esteemed leaders in the business community. And a big thank you to the organisers of the event and all the sponsors and partners. What I thought I would do is just share with you, with my global hat on, a few themes I am seeing in the world of real estate, and that this could give some food for thought for the esteemed panel which is following shortly after me, which I think, having seen the lineup on that panel, should be a pretty vibrant discussion. But let me just share you some of the themes I'm seeing with my hat on. And really it's a question of giving food for thought. There are 5 themes I'd like to share with you, and they're all interlinked, and hopefully this could give some perspective. The first theme I'd like to share is 10 years ago, real estate was seen as bricks and mortar. It was seen as bricks and mortar in one's own country, possibly in one's own city. It wasn't really seen as an asset class in its own right. And I think there's been massive changes in the last 10 years. I think 5 years ago you could see that real estate is seen as a proper asset class. It is a genuine allocation of capital goes to real estate, but it's become increasingly global in nature. And just in the world of KPMG, 15, 20 years ago, maybe even 10 years ago, the vast majority of our work was national. Now, much of our work is international and cross-border. And this slide here just shows you the scale of the direct commercial real estate and the growth. 2013, this slide shows the estimate of the total direct commercial real estate being $500 billion US. It actually turned out, in the final figures which we're just updating, to be $563 billion US. That is direct commercial real estate. And that would have been a growth of 20% on the previous year. And that trend of growth is continuing. But there's a couple of points I'd like to share. The first is, still as an asset class, the big institutions of the world are under-allocating capital to real estate. Still, Asia, by global institutions, is under-allocated. So in Asia Pacific, you have a double whammy of an under-allocation to real estate in Asia. Secondly, there's so much capital around, the supply of investable real estate is the real issue. Despite there being 563 billion of business done on direct commercial real estate, the demand is for much more. There's much greater need than there is supply at the moment. On allocations, let me just share with you. Still, real estate is under-allocated, but it's changing. I'll give you a couple of examples. The Canadian Pension Plan Investment Board allocated 4.3% to real estate in 2007 and has changed its allocation to 12% by 2012. The National Pension Plan of Korea now has a 10% allocation to real estate. Norwegian Sovereign Wealth Fund, 5%. The trend is increasing the allocation. But there's something just to bear in mind, a key point. For every 1% drop institutions have in their allocation to equities, that gives rise to a 7.8% increase in demand for investment holdings in real estate. So this inevitable rebasing of allocation of asset classes will give rise to very, very big demand for institutional grade real estate moving forward. So you've got real estate as a global asset class. The other big change you've seen in recent years is the global flow of capital. The volume of capital circulating in the world it really is remarkable. This slide from our friends at Jones Lang LaSalle just shows, in respect of the approximately $50 billion of capital raised as global funds, how it circulated through the world. And you can see from this, of the approximately 50 billion raised, which is the grey globe, 33 billion went to the US, 10 went to Europe, and 4 went to Asia. But look how it all circulates thereafter. A couple of trends to note. The trend now is for global fundraising. It's not just regional fundraising, it's not national, it's global fundraising. In the PE world, which is not represented in this slide, $101 billion of capital commitments were achieved in 2013, of which 33 billion was for global funds, 32 billion for the US. So 2/3 is global funds and US, with a heavy looking at debt advisory, debt restructuring, and opportunistic, more than the value-added equity fund approach. A third interesting statistic is the cross-border flows in 2013 on real estate were $113 billion US. That is capital flowing from one region of the world to the other. And this cross-border flows of capital is a very important phenomena. In Europe alone, 25% of the total commercial real estate investment in 2013 came from funds outside Europe. This is carrying on the main destinations, of course, being London, and outside London it is the US. If you look at the flow of capital, it's always been the tension between two forces. One has been the long-term structural growth story of Asia versus the opportunistic short-term gain potential in the US and Europe. And in recent years, there's been a pulling of capital from Asia Pacific and the Middle East into Europe and the States, because for quite a manageable amount of risk, one can actually obtain quite good opportunistic returns because assets are available, compared to in Asia where there's a relative shortage of assets. So that balance between the opportunistic play in Europe and the US versus a long-term structural demographic story in Asia is still playing out. And my instincts are we're about to see probably a bit of a swing back towards capital coming to Asia, as some of the recent deals done in Europe and the States are seen as possibly being on the high end of the scale. A very good way of summarizing how much capital is out there is for every dollar of investable real estate, there is $7 of capital chasing it. So the message to the friends in the audience here is, globally, there's no shortage of capital. The real issue globally is supply of available assets. And I know in India this is a slightly different issue, but globally there is a glut of capital and liquidity. The third point I'd like to share is the trends of population and urbanization. And if this slide does look a bit lopsided, don't worry, you haven't been having a drink first thing in the morning. It is actually the map of the world in 2050, updated for the changes in population from now to then. And you can see how remarkably small certain parts of Europe are becoming. In 2011, ASPAC, Asia Pacific, accounted for 27% of the world's population. By 2031, it will be 50%. By 2050, according to the UN, 67% of the world's population will be outside Europe and North America. A third of the population will be in India and China. That's the population side. Then you've got the whole demographic side with the age of population, etc., urbanization, all the infrastructure-related developments going on. The whole population urbanization story for the long term is something which is very, very important in the considerations. And the very smart investors are those who can harness these trends and then access the capital, which I mentioned earlier. There's two other points I'd like to share. Transparency. In the Western world, everybody talks about transparency. Some of the very professional real estate groups have their transparency indices. These tend to be looked at through the lens of a Western investor, where there is regarded as a direct link between transparency, cost of capital, cost of financing, etc. But what I'd like to say is, I've been based in Hong Kong for 20 years. I'm based in Asia. And there's a wonderful Chinese expression, may you catch a fish in muddy water, which means transparency is all very good, but if you know how to navigate through the market yourself, you can actually do some very good deals. And there's some very good examples in Asia. Vietnam, for a number of years, was lowest in the transparency index. But Japanese investors, Korean investors, Malaysian and Singapore investors, until recently had done very well there. At the moment, Indonesia, to an international investor, creates some concern in terms of transparency, but a lot of canny Asian investors, a lot of canny Chinese investors are doing very well, thankfully, on that. So this transparency, is it, it'll be interesting to see what the panel thinks, there's a balance on how far one goes on transparency. A certain amount of transparency definitely is necessary for the markets to work well. And that judgment on what balance to have, I think, is very, very important. Linked to that is how sophisticated real estate markets are. I know there's a lot of talk about REITs in India. I think REITs bring a lot of transparency, but they also bring liquidity. They bring professional management. But most importantly, they bring an ordered way in which investors can exit properties. And I think REITs are a very, very important part of the transparency discussion. But the fifth theme I'd like to raise with you is government and regulation. There's a couple of key points here. Government as a regulator in terms of control and policies is a big theme at the moment. You've got central bank involvement in how much can be lent to the real estate sector. I mean, that is an issue in India. It's an issue in China. It's an issue in other markets. You've got Basel III and the knock-on effect of all the real estate funds and how bank capital is deployed. But you've also got tax. And tax, I know in India and other countries, real estate is quite heavily taxed at different levels, multiple taxation. But tax as a use of a public policy is also an important trend. Who would have thought 2 years ago that Hong Kong and Singapore would bring in stamp duty, double stamp duty and prohibitive levels of stamp duty in order to cool two markets which were regarded as pretty free markets? But they have been brought in. So this use of stamp duty and tax as a way of addressing market conditions, I think, is here for quite a while. What's very interesting in Singapore and Hong Kong is that whilst it may have slowed down transactions, valuations haven't come down. And you've now got pent-up demand because there's so much liquidity, as I said at the beginning. You've got pent-up demand to do the deals. But you've got to be a very keen investor in Hong Kong if you're prepared to pay 24% stamp duty on a property. It's got to mean a lot to you. But this use of policy and the impact of policy on real estate is a big theme which I think is going to carry on. I see there's a lot of progress in India on the land pooling and also on the resettlement and rehabilitation, on the REITs and also on the mutual funds. There's a lot of progress. My instinct is it's very important that one quickly gets to progress on the REIT legislation over the next year, so that the markets outside and the investors outside can see it's very meaningful, this step forward. And a very good reference point would be Singapore. A less good reference point would be Hong Kong. The way Singapore has been able to use the REIT market to develop its capital market and its real estate market is very, very impressive. And it's enabled the ability to upgrade on the whole management of real estate. I think one has to be careful then on regulation. I know you have the new real estate authorities coming in. The challenge, of course, is that they bring facilitation into the market as opposed to another layer of regulation and another layer of bureaucracy. So I think the use of regulators in order to facilitate market development is very important. So look, these are the 5 themes. Really, anybody who thinks that real estate is not a standalone asset class, I think my advice would be to think again. Secondly, it really is a global asset class. Thirdly, there's huge amounts of capital floating around globally looking to invest in real estate, whilst it being recognized that still the allocation of capital is underweight. Then the whole issue of transparency and how to get the right balance in order to get the right market. It's not as straightforward as the Western world of believing full transparency is the right way to go. Then harnessing the full demographic and population story in this part of the world, which means it's often about cities, it's often about new precincts, it's about new development concepts, not just buildings. And then finally, trying to get regulations not to hinder the development of a market, but to facilitate it. Anybody who's able to bring those full 5 things together will end up a very wealthy man. So those are the big themes I see. Just some final comments on India. I'm hugely impressed on the potential. Outside India, rather similar, I'm based in Hong Kong and China. Outside India, it's like outside China. The press at the moment isn't hugely positive about the real estate market and the investment, and have found it quite hard to invest, get the approvals, complete, sell, and exit. Now, obviously, one doesn't want international investors to come in, make a quick buck and leave. It's all about commitment to the market. But there is a sentiment out there that it's become very hard to get things off the ground and done. And because there's so many opportunistic deals back in Europe and in the States, China, India, and a few other markets in Asia have been put a bit on the back burner. So I think one of the challenges is on the assumption it looks like there might be a change in government coming through, and it looks like the pro-business agenda may be more at the forefront. My instincts from what I hear outside India is there's a lot of optimism that if a few big legislative changes can come through in the next 6 to 9 months, and if this pro-business mentality and mindset can prevail, that there's quite a lot of capital stored up waiting to come into India, but just wants to find a more facilitated way to enter the market. So I think there's still a lot of potential there. So there's some food for thought. Hopefully the panel can digest it and probably destruct everything I said. But I hope that gives you a bit of insight to some of the things we're seeing globally. Thank you.
May I please request Sunita Quadras to step forward, business head, Times Conferences, and present Andrew Weir with a memento. Thank you, Mr. Weir, for being with us here, making it so very special, having a great opening session, setting this day in good stead. Thank you, Mr. Weir. Thank you, Ms. Quadras.